Hi, everybody. Thank you for joining us today for Amplify. I wanted to let everybody know that this webinar is going to be recorded. So if you feel like you miss anything, don't. You'll be able to check back in. It'll be available before the end of the day. While Joe is presenting, the Q&A will be open. So please pop any questions that you have in there. And he's left time at the end of his session, so we'll be able to answer a few questions. Joe, I want to thank you so much for being a speaker here at Amplify. We couldn't do it without our wonderful speakers like you.
Thank you.
So without further ado, I'm going to hand this
Okay.
over for you to get started.
Thank you, Nicole. I really appreciate it. And thank you to AutoLeap, too, for putting on this virtual conference. It really is a nice conference, and it's a great supplement to all the other training that's out there these days. So thank you. I really appreciate it. And just before I get started, I just want to thank the audience, too, for being here, for taking time out to be here. I'm in the industry for nearly 50 years, and I have the highest respect and regard for each and every one of you, what you do each and every day, whether you're a shop owner, manager, technician, service advisor. Think about what you do on a daily basis and be proud of it, because what you do is you keep the country moving, literally keep the country moving. So it's just my little way of giving back. Hopefully you'll get a lot out of today. I'm sure you will, but I just want to put that out there that it really means a lot to me. We take it seriously at Elite that, to give back and to share our experiences. So just thank you. And thank you to AutoLeap again. So today's going to be about expense management, best practices. It's going to be about not so much with traditional financial courses that you may have attended already about labor rates and production and things like that, KPIs. We're going to talk a lot about not so much, well, expense management is not so much cost cutting, but cost controls. It's understanding basically three things: that improving your bottom line requires a knowledge and due diligence to understanding how those expenses line up in terms of budgeting, cash flow. You have enough cash flow, because if you don't, then it hurts the bottom line. It also, you talk about expense management, it's about finding those hidden costs, those sometimes losses that go undetected and are very difficult to find, even on a profit and loss statement or a balance sheet. And also, it's to make sure that your cash flow is sufficient enough to pay all your expenses, your payroll, taxes. That's what expense management is all about. And two things I want to make clear before we get going. Some of the material here may be simple, may be easy for you. You've done it before, and that's great, because a review is always good, because repetition is how we reinforce what we've learned, whether it was last week or last year or 10 years ago. So a review is fine. You take Tom Brady, who's seven-time Super Bowl championship. Even when he retired at the age of 45, he was still reviewing, going over, his best practices, going over his plays and reviewing and reviewing. Take a concert violinist, 50 years playing the violin. That person is still reviewing sheet music and, going over things. So, just if it's a review, that's fine. Now, if some of the stuff I talk about today is a challenge to you, or you struggle with it, well, to be honest with you, that's even better news, because now you know a pathway to find out what you need to learn about, or do your own due diligence to make sure that you understand some of these key strategies and key principles that we all need to know, especially if you're a shop owner, a manager, or bookkeeper. I'm not sure of all the different levels of people today that are attending this course, so I have to sometimes make it simple enough, and then also, in another sense, push some buttons to make sure that you're getting what you need to get out of this webinar. So, and by the way, one more thing. In no way am I suggesting that you need to learn some of these strategies and financial statements as an accountant would, or a financial advisor, or CFO, chief financial officer would. That's not the objective. But if you're a shop owner or manager, a bookkeeper especially, there are certain things that we're going through today that will reinforce some of the key things, the strategies that you need to know. If you're a technician out there, happen to be here, a service advisor, this is really good for you too, because the more knowledge you gain about what happens in the back will help you greatly when you think about how your role but how your role plays into the overall scheme of the business strategy. So it's all good. It's all good stuff. And I think you're going to like the way I'm going to present some of these, especially the financial statements. I really made it in a way that will satisfy the needs of just about everybody out there. So a little bit about Elite. By the way, I mentioned before, I've been in the business nearly 50 years. I now work for Elite. I have been for the past 12, 13 years. I was a shop owner for 41 years, sold my company in 2021. Before that, in the 1970s, after graduating high school in 1973, I was a technician. We called ourselves auto mechanics back then. Loved what I did, loved the industry, have no regrets. So, and I'm really happy that after selling my company in 2021, I can now devote my time to just helping others and helping shop owners and working with the great people at Elite to really help the industry. So that's what I do now. It's my give back. It's my second career. So really love what I do. This is who we are. We are a company that lives by the principle of never putting money ahead of people. That's who we are. We're principle driven. We're all about ethics, and that's just who we are. How to benefit today? How to best benefit? Please keep an open mind. Some of the things I say may be different, may be pushing some buttons, but and not to say that everything I tell you today you take as gospel. That's not what I'm saying. But different people can say the same thing two different ways, and they put a little bit different spin on it, and all of a sudden it becomes like magic. Oh, I get that. So have an open mind. If you have what's called a fixed mindset, where I'm not sure if that'll work, that's not going to work. Guess what? It won't work. So not that everything does work, because there is no magic bullet. There's no magic secret sauce here. There really isn't. But with an open mindset, what's called a growth mindset, you'll be able to accomplish a lot more in your life. So always and every day you have to get out there with that positive mindset. Very, very important. Please take a lot of notes. It's documented. I'm a little bit old school. I know that. And today with technology, a lot of you may be making notes on a laptop or a tablet. That's fine. But there's something about taking handwritten notes that does something in your brain. It helps to reinforce what you're hearing today, what you're trying to retain. Because retention is one of those things that you have no control over, because you can't retain all the knowledge that you're going to hear today. It's like reading a book. You can read a book and you love that book, but how much of the knowledge did you actually retain? By keeping really good notes and taking good notes today, just that one fact alone will help you to retain a lot more of today. So just take a lot of notes. Determine how the content can improve your business. So if you're taking notes, I really emphasize that you should take notes. You may end today's webinar with 20 or 30 or 40 different action items. So I don't want you to think that you got to accomplish all those action items by tomorrow. So what you want to do is, if you have 20 different items, 30 different items, tasks that you wanted to accomplish, break it down. What's the most important, top priority? That 20% is what you have to work on. And then how you begin to work on that 20% is to take the 20% of the 20%. So you may sift it down to maybe 2 or 3 tasks at a time, but you're better off building your strategy like that, like building a brick wall. You put one brick at a time, one brick at a time. Too many bricks being thrown up, you don't have a straight wall. So slow down sometimes, pump the brakes, less is more. So determine what content today really can make the biggest difference in your life right away. And that's how you determine what's important. And please, the last bullet point, make a commitment to your success. Really, there's only one person on this planet that can make the biggest difference in your life, and that's you. So there's no magic bullet. There's no secret sauce. It's you working diligently every day, continuous improvement, like that image is in the right-hand corner. You have to make sure that you work hard today to make today better than yesterday, and work really hard today to make sure that tomorrow is better than today. And that's continuous improvement. Okay, so today we're going to cover expense and debt management. I'll go deep into that, finding those hidden losses that go under the radar, cash flow, budgeting. Really get a handle on your cash. This way you can improve that bottom line. cost control. So we're going to find out about how we can structure our business in a way that reduces the amount of losses. And obviously, we want to work really hard advancing and growing your company. So that's the ultimate goal here. Find those ways. A little bit, a few stats here for that are pretty interesting. This is by the SBA, U.S. Small Business Administration. According to the SBA, and this is a recent survey, by the way, last year, I believe, the number one reason for business failure is lack of financial knowledge. And I can tell you that, way back in 1980s, I began my business career as a business owner in 1980. The first 10 years, I really struggled. I really did. I had a good business, didn't realize it. I grew the business from a small 4 bay to a 5 bay, then a 6 bay with a nice waiting area for my customers. I grew my customer base, my employee base, but I didn't have a good understanding of the financial side of the business. I was that kid back in high school that sat there in class with my arms folded, like in math class. Is this really important for me? Well, guess what? It really is. I thought math was boring. I thought that business math was boring because I didn't understand it. It took me a while, but once I started to understand the intricacies about business and the math, I learned to like it. And I knew that was going to be one of my key factors to grow the business in the 1990s and the 2000s. So that's an interesting fact. The other one that really is really amazing is this. 82% of failed business owners stated that their failure was due to cash flow problems. Cash flow problems. So that's an amazing stat. That really is. So to think about it, of all the times, because there's an expression in business that goes back a long time, and it says that you're a shop owner, a business owner, when you know that feeling you get midweek when you're wondering how you're going to make payroll. So, and I've been there, and it's not a good feeling. So we're going to talk a lot about that today to make sure that you don't have that feeling, that you get away from that stress. So why is business management so important? Well, number one, like I just said, reduces stress. There's nothing worse than worrying about making sales tax, worrying about the payroll, worrying about paying your bills, your parts bill. There's nothing worse than that. So when you get a good handle on your KPIs, when you're on cash control and on expense management, you reduce a lot of stress. You also become more profitable. You add more dollars to the bottom line. So the things I talk about today, pay attention to. Again, if it's a review, great. If you struggle with some of the concepts, even better, because now you know the direction you need to go to improve those strategies, those principles of the business principles that are going to make you more successful. Increases the value of your company. My father told me in 1985 when I bought my first home, he said, get your home ready and maintain it as if you're going to sell it tomorrow. Don't wait like a lot of people do 10, 15, 20 years in the future to think about, well, now I got to fix the roof. Now I got to replace the boiler. Now I got to repair the driveway. Because why? Because first of all, life can throw you a curveball. And that same philosophy about getting your house in order, you got to get your business in order because you don't know when life is going to have the twist and turn that you're going to need your business. You may have to get out of your business. So, and I hear a lot and I talk to a lot of clients that why wait until you're 45, 55, 65 years old to start thinking about getting your business ready? Your business should be ready to sell today. And your business, as far as your financials, have to be clean enough so that anyone looking at it will say, well, that business has value. So it's very, very important to have a clean set of books. And we'll get into that more just a little bit. Attracts and retains employees. It's unfortunate that for many, many years, the shop owners themselves, they didn't make enough bottom line profit to pay their people or pay themselves the money that they really deserve. It's gotten a lot better the past couple of years. A lot of shop owners have realized that we need to up our game. We need to have a structure that allows us, a business structure that allows us to earn more money. This way we can pay better. Because the only way to attract and retain quality people, you have to pay them. There are other factors involved, and this is not an employee management or a leadership course, because I can go into other details about what you need, but you need to be profitable. The business growth. I just mentioned that. A business that's not growing is dying. So to have a good bottom line helps your business growth. Another thing too, your labor rate may be correct, but you're still short. And we've seen that a lot lately with the clients that they raise their labor rates. It's in line, but why are they still suffering with cash shortages? So to have a good handle on your expense management and your financials, you'll help to correct that too. It allows you to focus on the greater good. This is, at Elite, we do a lot about, well, we focus a lot about who you are as a person. And once you get all the details of the finances in order and you're paying your people well and you're okay financially, then there's always a give back too. There's always, what can you do that to help your industry people, your community, your family, your church, or whatever? For the greater good is always a component of total success. But today we're going to learn about a little bit about financial statements. I promise you, I'm going to put it in a simple way, like I said earlier, that you'll understand it, and I think you're going to like what I have in store for you. So there's three basic financial statements. One is the balance sheet, cash flow statement, and the income statement. Now, I kind of made it so simple that I left a lot of stuff out. So for the bookkeepers here and the financial people here, they're going to say, well, there's a lot of stuff missing there. I know that, but it's done on purpose because I don't know the level of everybody. So let's go through the balance sheet, which is basically a snapshot of your financial health of your business at a point in time. And that's important because if you go for a loan, the bank or lending company looks at your balance sheet and they're going to look at that and they do their calculations and their analysis and they can determine if it's clean. They'll determine, yes, this person is a good risk. They have the ability to pay back their loan. So a balance sheet is important. The way I want you to look at a balance sheet is really for those of you who have purchased a home. Think of your home. So that you purchased in the recent past or in the past. So let's take, for example, your home value is $400. That's the first part of a balance sheet. It's called the assets. Your asset. That's what you own. So if the home value is $400,000, let's say you put a down payment of $100,000 on that home. Well, then you owe $300,000. That's called your liability on that asset. The liability is what you owe. So assets, what you own, liabilities, what you owe. The balance is 300. The home value is 400. The equity is what's left over, $100,000. So you take 400, you minus 300, that's $100,000 of equity you have in your home. And here's the formula that the reason why it's called a balance sheet. Liabilities plus equity equals your assets. So 300 plus 100,000 equals 400,000. Those two highlighted areas are equal. That's a balance sheet. So if you think about it in terms of owning a home, the asset is the home, the value of the home. Liability is what you owe on that home. The equity is what you have left over. That's the equity, what's left over from assets minus liability. Simple balance sheet. Again, the reason why is because I want you to be able to understand when you speak to your accountant, your coach, and your bookkeeper. Make sense out of these. The second is the cash flow statement. And this is a cash flow statement which basically monitors and tracks the cash coming into the business, the cash going out to the business. Now, cash in the business is not profit. Profit and cash are two different things. I'll get into that in just a few minutes. But this is the actual cash you have in the business. For the purposes of today in this webinar, we're going to focus and concentrate just on cash that we get from our sales of income from our parts and labor sales. There are other sources of income that we're not going to get involved today, but just keep it simple. So let's say at the beginning of the month, February of 2024, you have $75,000 in actual cash in your account, in your operating income, your operating accounts. And then these are the outflows, what you have to pay out in this month. The parts bill, $35,000, your account payables, utilities, insurance, office supplies, all those little things that are there every single month. And then your payroll, obviously, has to come out of this $75,000. Then maybe you have a loan, a truck loan of $1,000. So here we have a total cash outflow of $66,000. So you start with $75,000 in cash in the bank. You pay out $66,000 in outflows. What's left over? So 75 thousand minus 66,000, that's $9,000 in cash that's left over. That's a good thing. That's called positive cash flow. And you should work to get at the end of the month have positive cash flow. Now we will go into a few more slides down the road. We'll go into some of the reasons why you may be short at the end of the month. But if this cash flow doesn't make sense or doesn't equal to a positive net at the end, there's a problem there. And then we're going to go into some of those issues in a little bit. So just hang in there for a second. But again, this is another financial statement that you need to become familiar with. Again, I want to clarify this. I'm not asking you to be proficient as an accountant or a financial advisor. That's not the purpose of today. But you should be familiar with these if you're a business owner, a manager, and if you're a service advisor or technician sitting in on this. Guess what? You learn a lot of things that maybe most of us out there don't know. So this is all good information. The last is the income statement, or what's called the profit and loss statement. I'm going to go into a little bit more detail with this because I think that most of us need to understand this a little bit better than the other two statements. So the income statement basically tracks your total income, then your cost of sales, which are cost of all. It's also called cost of goods, revenue and income minus cost of goods. That equals your growth. And the slide after this will break it down, make a little bit more sense out of this. You take your gross profit, which is needed to pay all operating expenses, and you take out your operating expenses from your gross profit. That equals your net income. Well, let's break this down a little bit so I can show you exactly what this looks like on a very, very simplified profit and loss statement. And this is for December of 2023. We'll look at a snapshot of a month profit and loss statement. Labor and part sales. Again, we're going to just narrow it down and focus on those two areas. I know some of you do towing. You may rent out a section of your building for income. Let's just keep it simple for this webinar. I think it'll be more beneficial to the majority of people. So in December of 2023, you had a revenue income of $100,000. Whether you get paid on all this money or not doesn't matter at this point. This is what you completed. This is what you billed to the customers, and it equals $100,000. Your cost of sales. In other words, what did you actually pay for parts? And what did you pay your technicians for the month of December? I made these numbers, by the way, very, very simple and basic because I like numbers. When I look at numbers, for myself at least, I'm sure most of you the same way, you got to look at numbers and simplify to a point where it kind of makes sense immediately. You don't have to think about it. So your cost of sales at this point is $40,000. That leaves $60,000 in gross profit. So revenue minus your cost of sales equals your gross profit. Simple enough, right? Here are your operating expenses. Now, there are a lot more than this, but I just put this down as some of the more popular ones. Your rent, the other payroll now, not technician payroll, but all the other payroll. In other words, your service advisors, managers, and other support staff, $10,000. Utilities, insurance, and all other expenses. And there's a big long list, by the way. I just didn't document them here altogether. That equals $40,000. So if you take 60 from 40, that leaves $20,000 of net income profit. Again, this is not necessarily cash, and we'll explain that in just a little bit, but it's your net profit. Let me give you one clarifier here about this, why profit doesn't always equal cash in the bank or extra cash at the end of the month. If you have a $20,000 net profit on the bottom line there, what if you do fleet accounts and you have fleet accounts that equal $20,000? In other words, these fleets owe you money and not expected to pay you for 30 or 60 days. Well, then you have no extra cash at the end of the month, zero, because you're owed in account receivables $20,000. So you have to be very, very careful of how you look at a profit and loss statement because profit doesn't always equal cash in the bank. So here's how we look at it. So you take $100,000 and you deduct $40,000, that leaves you with 60. You take the $60,000 and reduce it and take, minus the expenses, and that leaves you with $20,000. This is a simplified, very simple profit and loss statement. Again, I think that if you were to start anywhere, start understanding the income statement or profit, or also called profit and loss statement. I think it'll do a lot of good to understand exactly what that looks like in terms of cost of sales, gross profit, your operating expenses, and your net profit income. Okay, so the question always comes up. I get asked this a lot. How often should you review your financial statements? Well, first of all, if there's some of you can do it in house if you have a company like or a program like QuickBooks. If you don't, then you rely on your accountant. But in either case, I think that you shouldn't let a 1 quarter every 3 months. At the end of that quarter, you should review your financial statements with your business coach, with your accountants. If you have a bookkeeper, with your bookkeeper too. Because the more you review these a few times out of the year, the more that things will stand out. You'll see those red flags, those anomalies. So, every quarter. Now, this is different, and I'll get to this in a minute about the reports from your business management system. These are accounting financial statements that are done through your QuickBooks, or if you don't have QuickBooks, if your accountant will do them for you. But you should become familiarized with these three very important financial statements: balance sheet, the cash flow statement, and the P&L or income statement. So here's two tips I want to give to you. First of all, meet with your accountant every quarter and go over these statements and other things about business. Don't wait to the year or the beginning of the year, because tax preparation is ongoing. It's all year long. Don't wait till January and February, like right now, to start getting your stuff together for the tax return for last year. It's actually a little bit too late. You First of all, by June of any year, you got a pretty good idea of how that year is going to shape up. Whether you're behind your goals or ahead of your goals, big time, is going to be more profit. And by the end of the third quarter, by early November, you got a very good idea, and you can project with about 90% accuracy of how that year is going to end up. If in November you see that you're going to see, or October, even October, if you see that your profit is a lot more than expected, again, let me just back up a second. This is why it's so important to keep track of especially the profit and loss statement, because you're taxed on the net profit, the net profit, at the bottom line profit. So if you're looking at a windfall this year or next year in November, the time to sit down with your accountant is right then and there to say, look, we projected a net profit of 50,000, but it looks like we have 150,000 net profit. What can we do now to help to minimize our tax obligation for this year? But it has to be done in the previous year to really have an impact. One thing more on this topic. It's common where the tool vendors, the tool salesmen come by in November, December and try to convince you to buy equipment or tools to save on taxes. I would recommend not listening to them and speak to your coach, your accountant, bookkeeper, because you don't want to just pay arbitrarily to reduce your tax liability without knowing your actual cash reserve. So, because you don't want to reduce your cash reserve without making sure that you can not just that you can afford to pay for this tool, but do you really need that piece of equipment? So listen to your accountant, your coach, and your bookkeeper, not to the sales. Nothing against salespeople. I'm not saying that, but they just don't know your particular business and your cash flow situation. Okay, so one of the things you can do is to get a lot of good reports from your business system. Whatever business system you use out there, there are different reports. I don't know every system. I just know a few of them, but you should get to know your business systems really well to generate reports. And there's other things in those systems that really are pretty relevant to what you do each and every day. So make sure that your system is set up properly. The correct pricing, your parts matrix, or for labor matrix, if you use one. Technician setup is really important. Make sure that all the pay that the technicians pay is set up correctly, or else your gross profit is going to be wrong when you do a report, or when you bill out a job, when you estimate a job, your gross profit is going to be wrong. if you take from inventory and those part prices are wrong too from inventory, then your gross profit is going to be wrong in your business system too. So make sure that everything is set up properly. Learn all the relevant features. There are a lot of there's probably more features than you ever possibly use, but learn about them because this is a good way to promote your business and to streamline and find efficiencies, ways to strategize, production, whatever it is. So learn all the relevant features. Use the can job features. I used to love that when I was in business. I built so many can jobs, but you got to update them too. There's a lot of systems, and again, I don't know the every system, but if you make a labor rate change on your labor rate side, does it automatically, or do you want to automatically up the labor rate on those can jobs too? You may not want to, you may want to. So just remember that when you use the can job feature, but it may have to be manually updated if you want to at that time. So very important. And again, I mentioned this earlier, learn all the relevant financial reports. There's a lot of them in there. Every system gives you a good amount, a good selection of good reporting. Remember this term. I learned this term years ago when computers first started coming out, the PCs back in the late 70s, GIGO, garbage in, garbage out. So if you don't have the right information going into your business system, you're not going to have the right information coming out. So make sure that everything is set up correctly. I can't tell you all the ins and outs of every single system. It's impossible. There's a lot of good systems out there. So learn your system, learn it well. You'll be in a much better better position to understand your particular system. Okay, so controlling debt. Controlling debt. I think that when we look at debt, we have to understand two things, like I mentioned earlier, and this is where the cash flow statement comes into play. How much cash do you have? How much cash do you have available at any given time? Because, if without enough cash, nothing really happens. And again, I go back to the account receivables example. If you can have a bottom line profit end of the month of $50,000. But if you're owed $100,000, you're actually in a negative $50,000 because of the cash flow situation. So again, cash and profit are two different things. It's the reason why a lot of you, probably many of you, have had that year where the accountant tells you you had a great year, but you owe another $45,000 in taxes, and you tell the accountant, well, where's the money? Where's the money? I don't have that kind of money in my account. What happened? So that's because of these issues we're talking about today. This is why expense management is so critical to your overall success, especially in financials. So let's just review a couple of things to make sure that hit home. And this is directly from your income statement, also known as profit and loss statement. Revenue and income, total sales, parts and labor. I do realize that you have other income streams. Maybe you have a gas station that has a convenience store or a car wash. I get that. But right now, we're going to just focus on and just narrow it down to parts and labor. It makes it simple. It makes it easy to understand. So your revenue minus your cost of sales, part cost and technician payroll, that equals your gross profit. From your gross profit, that pays for all other operating expenses and your loans. So there always has to be enough gross profit, a sufficient enough gross profit to pay all your expenses, but yet enough to leave a little bit at the end, because that's what really drives the business for future growth is the net profit. So the gross profit minus paying for all your operating expenses and loans equals your net profit. So keep these things in line. I hope you're making notes at this point because this is really, really important. If you understand these concepts, then you'll understand how critical it is to to make sure that your business system is set up correctly in a way that allows you to get a true gross profit number. Because on parts and labor, because that gross profit is really needed to pay for all those operating expenses. We'll go into a little more detail. I can't go through what those KPIs will look like today. I just don't have that kind of time. That's a whole nother webinar, by the way. But for right now, and let me just back up a second. If you don't know what the number should be, then I hope you have a coach or someone you can rely on to help you to understand what should my labor gross profit be? What should my part profit be? Because those two numbers are critical. They drive the success of the business, the gross profit number. And by the way, well, on this topic, you hear a lot. Well, I had a $1.1 million sales this year, and over last year I did 900,000. We're projecting 1.5 million for next year, 1.7 million for next year, but that's just the top number, the top sales number, because and really that's a number. That's an emotional number. I look at it like it's just the top number that we need to shoot for, but it's not the real true number of the success, or I should say, the health of a business. It's what the gross profit is, and actually, even more important, what the net profit. Because you can have $1 million shop that has a $200,000 net profit. You can have a $1.5 million shop in sales doing $50,000 net profit. Which of those two would you rather have? The $1 million shop that's doing $200,000. So, the net profit is very, very important. And there are different ways to get there. Again, we don't have the time today to strategize on how to get there. But the top number is very important, that the top number is an emotional number. So just because you go from 1.1 million, 1.5 million, that's great. I mean, that shows growth. But does it really relate to the success of the business? It doesn't until you look at the net profit. If your net profit is increasing with your top sales number, then you're doing things correct. Okay? So I just want to make that point. Very, very important. So now we're going to build a budget. This is a basic budget. I'll explain it in detail. This is probably the most important slide of today. It really breaks down the why you should have a budget and how you can really, with some simple moves, next week you can have an effective budget. So first of all, again, to repeat what I said earlier, your gross profit must greatly exceed your expenses. If you have a problem with gross profit, you're not going to have a problem paying you will have a problem paying your expenses, and you won't have the net profit that you really need and desire. So gross profit has to exceed all your expenses. Now, most of you take all your earnings, all your sales receipts and customer, checks and credit cards and whatever, and you put them into an operating bank account, which is fine. That's what you should be doing. But you need to also establish what I call budget accounts. I'm going to explain that in length in just 10 seconds. But once you put that money into your operating account, your main account, then what I want you to do is every week, this could be done on a Monday, a Wednesday, or Friday. It doesn't really matter what day of the week, but don't let a week go by before you distribute that money into different accounts. So you're going to take that money, and then you're going to establish in your bank. You're going to go to your bank, and you're going to create at least these accounts, additional bank accounts: payroll account, sales tax account, other tax account, equipment upgrades account, and profit account. So let's go back and review all these and make sense out of this. So let's say you start every week with $50,000 in your of cash that you receive from customers. Well, your payroll is pretty consistent throughout the year. So every week how much you're going to need in payroll. Now, whether you pay your employees every week, every other week, twice a month, it really doesn't matter. Just break it down to what that amount is per week. And I want you to put that money aside into a payroll account. So if that payroll amount is $2,000 or $3,000, $5,000, whatever it is, I want you to, from your operating account, transfer that money that you need for payroll into your payroll account. Put it aside. Then I want you to create a sales tax account. You use your business management system. You make a end of day report for the previous week, or end of week report, a business summary, whatever your system pulls that relevant report. And then I want you to look at that report and see how much sales tax you're responsible for, and put that money into a sales tax account. Set it aside. Now, let me just say one thing. Whether you collected that money or not, that sales tax or not, because you could have fleet accounts that owe you money, but you're still responsible to pay the sales tax. So whether you collected it or not, your business report will show you the sales tax amount that you collected. You put that money aside into a sales tax account. Other taxes, your accountant will do probably around this time of the year. If you haven't filed for an extension, your accountant will have probably do it now or very soon. Will give you your estimated tax for the entire year. If he hasn't or she hasn't done it yet, it will become they'll do that soon. So then you know how much tax you're going to need to pay in estimated taxes for the year, for the given year. You break that down, what that number is per week, and put that money aside. This way you have it. What we're doing is we're putting the money aside, putting the money aside. This way you have it. And by the way, this was taught to me by my father back in the 70s early 70s when I got my first job. He literally had me get a old shoebox with envelopes. And he says, now that you're working, I want you want a car, you're gonna have gas money need for the car, insurance, meals, going out money, if you want to buy clothes. So take envelopes and divide all this into the envelopes, what you need to survive each week. Break up your actual payroll. So that's the principle of this. So it's the same principle, it's the same philosophy, and it works. Equipment and upgrades. If you go back in your profit and loss statement, you probably can determine how much do you pay on average each year on equipment, upgrades to the facility, whether it's repaving, restriping the parking lot, window replacement, whatever it is, new lifts. With pretty good accuracy what you need this year and the next year in terms of setting aside that budget money. So if that is $1,000, if it's $2,000 a week that you need, that is amortized over the entire year, then put that money to a separate account too. Your profit account, probably most important, because without being able to put money to a profit account, you're really not doing all the things proper in your business. So the profit account is you sit down with your coach, your accountant, your managers, and you establish your KPI, your key performance indicator goals for the year. Your sales goal, gross profit goals, net profit goals. You sat down, hopefully before the year is over, like in November, December, you establish these goals. And for instance, to make it simple, let's say that you're looking to have a net bottom line profit of $52,000 by the end of 2024. Well, then I would allocate from your operating account every week, set aside into a profit account $1,000. All right, this way you have it. Now, if you don't, by the way, if you're saying to yourself, well, how do I know, or what if I don't have this money to set aside? That's a problem. That's the next slide. So just hang in there for just a minute. Now, there are more accounts that you could establish. When I was in business, I had about maybe 8 or 9 of them. I had training, I had marketing, I had other accounts that I broke up. I had what's called rainy day fund, which I allocated some portion of the money just in case something should happen. Because if something does happen, I want to make sure that I have enough cash reserve. But this is a good start. Do this. It's important. It will help you. You help your bottom line. As a budget is needed, a business grows, you change it. You just change the accounts, change the dollar amounts. By the way, don't mix business expenses with personal expenses. Don't pay with one credit card. Have a separate business credit card, a personal credit card. Don't have your home expenses. It gets too convoluted. In case of an audit, it just gets too messy. Plus, you won't really know your true business expenses. Keep it clean. Keep your business and your life separate. It just makes a lot more. It just makes it more difficult to analyze. It just makes it just more confusing. And by the way, you want to build a cash reserve of at least 3 months. So you look at, again, this is why you need to understand the profit and loss statement. If you determine that if the average monthly expenses and loans are $50,000 a month, then you need to have at least 150,000, 3 months worth of cash reserve in the bank. If you don't have that, that should be on top of your list to work with that. Work with your coach, your accountant, your bookkeeper, if you have a bookkeeper, to try to get that cash reserve. We all know what happened in COVID, right? It wasn't for the SBA loans or the PPP, the Payroll Protection Program, loans, a lot of businesses, not just automotive, they would have been out of business. So cash reserve is very, very important. Cash is, you heard the expression, cash is king. Reasons for being short on cash. Sales are too low. You don't know your break even. You don't know what that sales number should be. Too low. And sometimes you can have your gross profit in line, but it's just not in line enough for you to get a high enough gross profit to pay all your expenses. So if your sales are too low, analyze that. Why are they too low? Do you need service advisor training? Do you need to maybe an additional service advisor? Your technicians need to more training. Do you need additional service advisors? You need support staff. There's a lot that goes into this. For time issues, I can't go into every single scenario, but need to analyze this and make sure that everything is in place that needs to be in place. Account receivables, I went through this earlier. If it's too high, that's going to really impact your cash. I really recommend looking at account receivables every single week and make sure that you keep it as low as possible, as low as possible. Excessive or wrong inventory. Again, the Napa salesman comes by and, buy in September. If you buy 50 batteries or 100 batteries, I'll give you a certain discount off those batteries. Meanwhile, you could be tying up $5, $6, $8,000 in cash. Yeah, be careful with that, all right? Or having the wrong inventory. The wrong inventory, and this isn't a big issue as it was years ago because of the availability of part suppliers today, getting those parts to you in a more timely manner. But the wrong inventory, having money sit on the shelf, that's cash sitting on the shelf that depreciates every single month, depreciates. So be very careful about your inventory. Bad spending habits, excessive debt. Be very, very careful. Don't go out and buy things just because you like them. You see a new scanner, you see a new lift, you see a new Hunter alignment, road force balancer, whatever it is. These things, I'm not saying don't buy, you should buy them. But it has to be done methodically. Understand your cash flow, what you can afford, and it has to fit into the structure of your monthly cash flow analysis. So you got to do your due diligence. Production efficiency issues. Now, I really wish I had the time today to go through this because this is where literally the rubber hits the road. Production efficiency, shop layout, not having the right tools, the right equipment, training for the technicians, the service advisors too busy in the front office, taking too many phone calls, they're shuttling people back and forth home. There's a lot to production efficiency issues, but that has to be dissected. If you have a business coach, your coach will help you with this. Really, this is a major, major bullet point on this topic, and it should be looked at. But you can gain a lot by increasing production. Cost controls. We're nearing the end, so cost controls. Again, these are the hidden flaws that go under the radar. Let me give you an example of what I mean by cost controls and under the radar. Your technician gets a well, you order a steering rack for a vehicle, and the steering rack is $340. Technician gets the steering rack in the box, opens up the box, looks in the box, and the steering rack is cracked in half. It's broken, damaged during shipping. It happens. So that part now gets closed up again, puts back on the return shelf for return. But now is where the problem begins. If you don't have an effective way to manage that process, in other words, how are you going to ensure, or do you ensure that you're getting full credit to $340? Because we've seen where we're getting either no credit, we can get the credit in most instances, or maybe we get a poor return of $50 or $30 instead of the $340. Without a proper system in place, a cradle to grave process, we don't know what we're getting back. So sometimes you got to pump the brakes because you could be doing everything right. We talked about everything beforehand, everything right. But if this isn't really honed in properly and you're losing those hidden losses, you could be damaging your cash flow. So you got to look at a number of things. First of all, in order to have a company with high-performing company, you have to have the right people and an amazing workplace, hands down. This is not a leadership, business management course. I wish it was and had time for that, but this is where where the rubber hits the road. Hire right and create an amazing workplace. Again, control your inventory, have it up to date. Make sure that you have the right inventory. Track those warranty issues and comebacks. There are three basic reasons why you have a warranty issue: technician error, communications error. In other words, the service advisor and technician don't talk that well. There's a problem there, or it's a part issue. Track it, find out what happened, learn from it, have a discussion, use it as a learning tool, and move on. Quality is built into the process, by the way. There's not enough. There's not enough in at the end of the line to ensure that everything is going to be done properly. The culture of your company matters more than anything in this respect. Everybody's got to feel that they have a stake in the quality of the business, quality of their process. Create purchasing return habits. I mentioned this before. Have that cradle to grave process that ensures that every part that's returned and purchased has a process that ensures that it's being accounted for. Reconcile all those accounts. They have to be matched up. Not just your bank accounts, but all your statements from all your vendors. Match the invoices to the end of the month statements. Very, very important. And make sure that the pricing the ordered price matches the invoice price. We've seen it where you've ordered calipers, rotors, pads, and they come down and there's one price when you ordered it and a different price on this. It's not done maliciously. It's not done because someone wants to get over on you. It's just a mistake. Mistakes do happen. You have to ensure these mistakes don't happen. And again, I wish I had more time for this, but if you don't have workflow process, or if you haven't revisited them in a while, the more you can strategize, the more that you can hone in your business with workflow procedures and checklists, the better off you're going to be. Miscellaneous, real quick. So this is just something I put up here. I'm not going to go deep into this, but track your workers' compensation. Make sure that all your employees are labeled correctly. Health insurance costs. Sit down with your insurance agent every year. Go through insurance costs. Go through your garage keeper's liability. Make sure that you're you're covered enough in case of a catastrophic loss, a fire, damage to a vehicle, a customer's vehicle. Are your employees' tools, are they insured too? There's a lot going on with this. Then make sure you're complying with all your federal compliance, OSHA, EPA. You don't want something to happen there where you get a fine it just takes a simple repair or making sure that you stay on top of regulations and your state's repair shop regulations. In case you have a customer that logs a complaint with you, well, make sure that you are compliant with your state's repair shop regulations. All right, so 3 ways real quick this is, by the way, everything I spoke about today, you will get at the end. I'll give you a QR code, everything I spoke about. But if you want to do 3 things, I recommend these 3 things to really improve your business starting today. Review all expenses line by line on your profit and loss statement. Find out what's going on, ways to trim, ways to cut, ways to improve. Create those separate bank accounts we spoke about, budget those expenses, and create a budget based on your cash flow, not just your profit. Understand that profit doesn't always equal cash flow. Cash flow is king. Cash is king. And real quick, you'll get this in a email to you. I'll give you a QR code in just 1 minute. But we can help with coaching, one-on-one coaching. Lee can help with management training. That's what I do also. Fly with the Eagles, 3-day, highly intense course, the best on the planet in terms of business management for business owners and managers. Service advisor training, we do that also, and mastermind groups, pro service, mastermind. It's kind of based on the 20 group concept. So that's what we do. A little bit about myself and the company that now I work for after being a shop owner for 41 years. So it's what I do now. So and thank you for attending. And this is the QR code. Please take advantage of this today. You'll get the copy of everything I spoke about. You'll get more information about our company, and also you'll get signed up for our tips, and you'll learn a little bit more about us. So I don't want to hand it over to Nicole. I want to thank everyone. I really hope that you appreciate it and enjoyed what you heard, and implement, and just take this information. Remember, you're the only one on the planet that can make the biggest difference in your life. Take this information, have an open mind, move forward, I guarantee you, you'll be more successful. Thank you very much. Thank you. Thank you for your time today. Nicole, questions we have?
Nope, you're all good, and we're right at time. So thank you
Okay.
everybody for joining us. Joe, thank you so much for sharing all of this with us and for being here. And I hope everybody enjoys the rest of their day.
Okay, very good. Excellent. All right. Thank you very much. Thank you very much. Have a great day. Thank you, Nicole, for everything. And thank AutoLeap. I appreciate it. Bye now. Take care.